Let's start with this oil market because it's confusing a lot of people. We've had some people come on this show and say there's a threat of dropping to, say, the 50s, maybe even the 40s. Others saying triple-digit crude just on the horizon. How are you thinking about this, and are you positioning bullishly for this story?
So basically, I think there's no medium-term structural trade for crude. I think the market is quite balanced, where we have still relatively large non-OPEC supply growth coming for the next 2 years, and demand growth slowing down. So it gives a bit of a bearish bias to crude. But against that, we have the largest short ever in terms of spec positioning in the market. And non-OPEC supply growth has disappointed relative to expectations. So we're expecting 1.1 million barrels a day of non-OPEC ex-US supply growth this year. We're getting at 400,000 barrels a day. Next year, it's expected to be 1.5 million barrels a day. It could well be 1 million barrels a day lower. So I would say overall, the market doesn't need more OPEC oil for now. And so when they speak about bringing oil back over the next few months, it puts some pressure on the market. But against that, we have geopolitical risk with clearly, we are waiting for Israel's response to the Iranian attacks and generally the axis of resistance attacks on Israel. So that could impact the oil market quite significantly.
What's your base case, your overall conclusion? Would you say the risk is for higher prices and not lower ones, at least in the short term?
I think in the short term, the risk is for higher prices, yes, because inventories are low. The market has been trading on next year's balances, but it's hard to get much confidence on those. And spec length is at all-time low, and we have lots of supply risk potentially in Iran.
Pierre, how high? Because in 2023, you had a call of $140 per barrel on oil. Yeah. What could this geopolitical risk push it up to?
So it really depends. So let's say if Israel blows up the oil export facilities of Iran, so basically we would lose 1.7 million barrels a day, which out of a 100 million barrels a day market is important, but not too much of a game changer. Saudis and UAE and Kuwait and a few OPEC countries could increase production to make up for it over time, but it would actually tighten the market and bring prices up. Then the question is, how would Iran react to that? Would they, they said that they would blow up oil facilities in the region, in Saudi Arabia and UAE and all that. So would they do it or not? I mean, that,
But is there a range? Are we talking about $80 where we are now? Or are we talking about 100 or 120?
I think maybe like $10 to $15 higher. So I'm not calling for much higher oil prices, but I think they're more biased to the upside. I mean, the average price last year and this year for Brent has been around $80 a barrel. That's like we're just under that now, so it would make sense to be a bit higher at least than the average.